So the market's still moving higher, and it seems lots of positive sentiment around the banking sector specifically is what's fueling much of this run. Let's take a look at your perspective on the banking sector as a whole. Are you as bullish as RenCap seems to be?
Thank you, Alicia. Good morning. Based on a number of events, obviously the primary one being the positive outcome of the elections, and looking at the numbers that have filtered through for first quarter, we'll find that there has been a lot of bullish sentiment surrounding the banking sector, and a lot of it is actually, in our sense, pretty much justified. Indeed, we have taken a look at the banks again based on intrinsic numbers, and we have seen significant valuation dips across board. We are particularly bullish as well, largely on the middle tier banks. There are a good number of banks within that space that, in our view, hold significantly strong upside potentials, and in some cases, a few of those in the top tier, space as well.
Let's hone in on that mid-tier space and what actually stands out as a stock pick for you within that segment.
We're looking at Access Bank, we're looking at Sky, we're looking at Fidelity, we're looking at Sterling. Those four banks hold, on the average, anywhere between 30 and 40% upside. On our views, a number of factors obviously were responsible for this. We've seen that there has significantly been closing down in terms of market share from a net interest margin perspective. We find that margins have recovered significantly from pretty low levels of last year. This particular set of banks have significantly good liquidity position and have not essentially breached the loan deposit ratio provision or buffer, as it were, are in a better position to significantly grow credit much more than you would find for the top tier banks. So that obviously puts them on a very good pedestal. And a good number of them also are leveraging on the retail, banking, space where they have, deep loyalty from segments of the market, and they are beginning to exploit those loyalties as well.
What are you making of confidence levels right now, Victor? Because confidence levels at this stage seem elevated, and it's exactly what's supporting the markets. But if those levels do wane moving forward, we could well see a sharp pullback. So how prone to profit taking is this market, looking at where confidence levels lie at this stage?
Oh, well, then again, you have a valid point there. From a fundamental perspective, we keep reiterating that there is significant value to be had for those who would buy into the market. But unfortunately, from a technical standpoint, we've seen a lot of volatility driven largely by activities of speculators, as it were. So there is still the risk that once there is any significant upside, 15–20% on a stock, you find people book profits. We are hoping that with the conclusion of the elections and essentially some form of continuity in government, we expect to see some rapid acceleration in policy thrust from the incumbent administration. Perhaps we'll see perhaps the attempts at reforming the energy sector, notably power and oil and gas, should begin to drill down into the financial space, because obviously there is significant buffer in there to fund some of these transactions. So while the optimism is justified from a fundamental perspective, we find that there are intrinsic, should I call it, dislocations that ensure that technicalities still do hold significant sway from a profit-taking perspective.